with a dramatic growth, with one of the most impressive stock price move in the stock market over the past year and a half. We need to talk about this stock. Hey there, Tamir from Fibonacci-Traders.com here. Special video on the one and only Palantir.
Palantir stock, which has seen a remarkable rise, closing at a new multi-year high with gains approaching 500% since early 2023. This dramatic growth has been one of the most impressive stock price moves in the market over the past year and a half, creating significant wealth for early investors. Now, some of you might be thinking, is it time to sell Palantir? Not because the business model is failing, but because of concerns over its high valuation. But before we jump to conclusions, let's take a closer look. Palantir's price-to-earnings (PE) ratio is around 80, which might seem high compared to the broader market average. But is it really overvalued? To determine whether a stock is overpriced or a good deal, we need to analyze its future growth prospects and run the numbers. It's easy to label a stock as overpriced just by looking at its PE ratio, but that's not the whole story. We need to consider the company's growth potential, its specific sector, and its positioning in the market. One argument being made is that Palantir's current PE ratio of 80 is in nosebleed territory. The stock has surged over 37% since the last update, especially after reporting impressive Q2 2024 results. But some believe that Palantir's addition to the S&P 500 has pushed its valuation too high, with management's guidance and market expectations factored in. They argue that there's more downside than upside in the short term. However, I think Palantir could continue to rise, potentially reaching $40 with the momentum from the S&P 500 inclusion, and then experience a correction down to around $34. But predicting this is tricky. If it runs to $40 and drops to $34, those calling it a sell now may still look off the mark. From a personal perspective, Palantir has been a highly profitable stock, generating substantial returns.
SaaS companies like Palantir typically command higher PE ratios than average businesses due to their excellent margins, sticky business models, and top-tier customer bases. So, while Palantir might be trading at 4 times the average company within the SaaS sector, it might be closer to 3 times. The question is whether Palantir's earnings and revenue growth are at least 3 times that of an average stock. When we compare Palantir to average stocks, its growth potential really stands out. Next year's expected earnings per share, EPS growth, is around 48%, while many other stocks typically fall within the 8 to 12% range. This means Palantir's growth is about 4 times that of an average stock. Similarly, analysts expect Palantir's revenue to grow by around 20%, though I think that number is underestimated and will likely be much higher. In comparison, many companies are seeing revenue growth between 4.5% and 6.5%, making Palantir's growth rate about 4 times higher. So, if Palantir's valuation is roughly 4 times that of an average stock, but it's delivering 4 times the growth, it may not be overvalued at all. In fact, it could be fairly priced. It's easy to dismiss a stock with a higher PE ratio as overvalued, but when you run the numbers and consider the company's growth rates, the picture changes. Palantir is a growth stock, not a value stock. Its growth rates and margins are far beyond those of value stocks like Coca-Cola or McDonald's, and it needs to be evaluated accordingly. If we run some realistic projections, we can get a clearer view of Palantir's potential. If Palantir grows revenue at an average rate of 27% over the next several years and sees net income growth of around 45% annually, it could reach a net income margin of 37% by 2028. While valuing the company at a PE ratio of 20 to 30 would make it seem overpriced today, that wouldn't reflect the reality of its growth potential.
A SaaS company growing revenue and net income at rates of 20 to 25 and 40% respectively deserve a much higher multiple than the broader market average. valuing Palantir at a more realistic P of 50 to 70, which is 2.5 to 3.5 times the average stock, makes more sense. Running these numbers suggests a compound annual growth rate CAGR for Palantir of 14% on the low end and 24% on the high end. Additionally, Palantir is likely to buy back shares over the next few years, which could further boost earnings per share (EPS). This share buyback potential, combined with the strong growth metrics, underscore why Palantir's current valuation may be more justified than it appears at first glance. When you begin to look at Palantir's through a more realistic lens, you realize something crucial. Palantir is not cheap, and it's not going to trade cheaply for the long time. Palantir is essentially a premium stock, like a Ferrari in the stock market. Just as you wouldn't expect to buy Ferrari for the same price as Honda Civic or a Corolla, you can't expect Palantir to trade at the same valuation multiples as companies like Pepsi or McDonald's. It's common sense when you think about it. Premium stocks with higher growth rates and better positioning in their industries will always come at a higher price, and Palantir fits that profile. If we consider higher growth rates, such as the 30% growth rate Palantir CEO Alex Karp used to discuss before the interest rate hikes in 2022, it becomes even more apparent. Although growth slowed across many companies during 2022, Palantir's growth rates have been climbing steadily again. When evaluating whether Palantir is a buy or a sell, you need to recognize that it's premium stock with strong growth potential. It won't trade cheap like traditional value stocks because it operates on a different level of growth and positioning. And now Palantir on the technical side.
Broke above this red trend line, and now this red trend line together with the 3530 is the support. It was resistance for the higher highs, which means as long as price of Palantir is stuck to the red trend line, whether from the downside or from the upside, from below or above, this trend line takes Palantir north. Now 37 is the resistance, long continuation above it, and we will see 39 and 41.62 to the upside. Let me know in the comments below, what do you think about Palantir? Where Palantir will end 2024? Which price can we get 50 to the upside by the end of 2024? Let me know in the comments below.
So hope you find this video helpful, educational. If so, like, subscribe. Check the links in the description below. I assure you, you will find what you're looking for. Until the next video, stay safe.